All right, now thanks for staying with us. Let's connect with connect with Sanjiv Bhasin and talk about the viewer queries. And before I do that, actually, let me just mark the markets because there's a sudden twist in the tail, so to speak. Mid and small cap stocks have reversed. The breadth's become negative. Globally, nothing has changed. But the markets, in a sense, are falling in their own weight, so to speak. 2 weeks of great rally, and today things have just come crumbling down. And I will not be surprised. There you go. So the smaller you go, bigger is the dent. Unlike what we've said, the smaller you were, the higher were the gains. Today, smaller you go, bigger are the dents in terms of what the market action is and what the market reaction is to small cap. I continue to maintain that time to switch from small cap to large cap, small cap to mid cap to large cap. You need to rotate 15 to 20% of your portfolio if you want to really manage risk in your portfolio. Query section now. I've got first query on Power Grid. 4,000 shares, can I hold them for 2 years? What is the short-term target? That's coming from Kerala, from Babita. Bhasin Saab, 4,000 shares of Power Grid. We were discussing with Nuresh that Power Grid is in a unique position. A, it's a stock which has consolidated enough. B, it's a play on power transmission. And C, it's a utility which will do well when interest rates will come down.
Yeah, good afternoon. Correct, Nikunj, and also it has to be it is a very, very big dividend yield stock. And the IRR is benchmark. So that there is a constant return here. The stock was trading at much lower valuations and now it has seen a 3-4 year consolidation. If you have a slightly longer term view of a stock which has reliable returns, then Power Grid is the best. Plus, you must see that we are in a power surplus situation where transmission now is the losses on transmission are the least. So I think it's in a very sweet spot. However, the stock has also been a participant in the rally in the power sector. And I would see it will consolidate with the rest of the power stocks as it plays along. But I would definitely stay put in this. It gives me confidence that it is a stock which has very good pedigree returns and the dividend yield is the added icing on the cake.
A second query is from Akhil, from Visakhapatnam. Thank you, Akhil, for sending the query. Now, Akhil's bought 500 shares of NTPC at 168. Accumulate or book profits? Bhasin Saab.
Congratulations, you had the conviction to get into NTPC when everything was, everything was moving except NTPC and the PSUs. So firstly, congratulations, stay put. I think NTPC is in the best spot ever. But, above 310, 300, you should book 50% of it and get into another large cap like a Tata Steel or a Hindalco, because I think that the dollar is going to weaken and commodities could be a very strong play. So I would say book 50% profit, get into a Tata Steel, Hindalco, both index composite, and you could actually play the metal rally. I think these stocks can give you a faster return than NTPC, which has been more than a doubler for you. So firstly, congratulations, and I would advise 50% profit booking.
And Akhil, if the dollar index comes down, commodities, they always rally. And if commodities, they rally, coal will also rally. If coal will rally, for NTPC, even though there were long-term contracts, in the merchant power business, they would have a struggle. But what Bhasin Saab is saying that if you switch 50% out of NTPC, where you're making some money, put that profit into, let's say, a metal company where if dollar goes down, commodities are dollar denominated, you're likely to make money. I guess it could be a great hedge if inflation, in a sense, sort of China comes back in 2024. So, Bhasin Saab, thank you very much. Always a pleasure to have you on the show. Thank you for watching the show and thank you for thank you for making it part of your life.